everyone. I hope you are well today. This is Tuesday. It is 11 a.m. and therefore that means only one thing. It is, of course, Training Tuesday. Thank you for joining me. Thank you for tuning in today. Wherever it is you happen to be watching, I am on a couple of cameras. So if you see me looking around a bit away from where you are looking, then apologies for that. Please do bear with me on that. So, like I said, today is Training Tuesday, and our topic for today is signs you might need to tune up your business's financial health. I'm going to go through a number of statements today, and it's worth asking yourself if you're a kind of yes or no when it comes to these statements and questions, because this will give you a good idea of areas that you might need to work on in your business when it comes to your business's financial health, so that you can run a healthier business financially. And that is, of course, what we all want to be able to do, is have a financially healthy business. Now, if you are tuning in today, wherever you happen to be watching, give me a hello in the comments. Give me some thumbs up, some hearts, some likes, some loves, whatever it is called on whichever platform you happen to be watching on. It does mean a huge amount to me. So I would massively, massively appreciate if you can do that. Good morning from Milton Keynes. Hello, Milton Keynes. It is lovely to see you. Thank you for tuning in and joining me here today. So like I said, today we are speaking about signs that you might need to tune up your business's financial health. Now, notice here that I didn't say the financial success of your business or to become more successful, because success is absolutely personal to everybody. And for many people, financial success does not equal success, and the definition is very different. So what I'm looking at here today is actually ensuring that your business is financially healthy. And a financially healthy business is one that is sustainable long term when it comes to the finances of the business. It is one that is able to support the business owner financially as well. And it is one that is not insolvent in any way. It's able to pay its debts as they fall due, and it is running in a healthy manner when you look at the finances of the business. So that is what I focus on, and that is what we are going to speak about today. So without further ado, let me first, I say without further ado, I'm actually going to introduce myself, because some of you may be new around here and not know who I am. My name is Annette Ferguson. I am CEO of Annette & Co, UK-based accounting firm. I'm a chartered accountant, certified profit first professional, and small business growth strategist. And ultimately, we help business owners take home more money from their business for them and their families to enjoy. So now, without further ado, let's dive into the signs that you might need to tune up your business's financial health. Like I mentioned, I have a number of statements, questions to pose to you. I'm not expecting you necessarily to answer these in the comments, although you are more than welcome to. I am not expecting you to answer these in the comments, but please do ask yourself these questions. Ask yourself, is this applicable to you? So I'm going to start with accounts payables. So that is also called creditors. So this is when you pay out money from your business to people that you owe money to in your business. So first off, are you monitoring the average days payable on a monthly basis? So are you monitoring how long it takes your business to pay its payables? And is it in alignment with the credit terms that you are offered? Basically, are you paying people on time in your business? And as a side note to that, are you actually reviewing your payables at least monthly, but ideally every couple of weeks, to ensure that you know what is coming up and that you are making sure that you pay other businesses on time for the services and products that you use? Also, ask yourself, are you negotiating rates with vendors if you are able to based on volume or loyalty or any other of those criteria? It may be that you have changed how you're purchasing, particularly in a product based business. If you're purchasing more, you may be able to negotiate a different and lower rate if you are purchasing more than you used to. Now, aged receivables. This is a real biggie when it comes to cash flow of a business. So, aged receivables is the money that you are owed for the work you have done. You might have also heard this called trade debtors. So, first of all, do you know who owes you money? Do you know how much they owe you and whether they are late or whether it's not due yet? You need to understand this, and you need to be on top of this on a weekly basis to understand how much money the business is due in. But even a predecessor to that, are you invoicing on time? Once you finish a piece of work, if somebody pays on invoice, are you invoicing straight away? And what credit terms are you giving that person? Are you giving them a long time to pay or a short time to pay? And what is your follow-up procedure from that when, let's say, they don't pay? Let's say they're late. Do you have a series of emails or a system that happens that kicks in that you know when it started and you know when, therefore, to start chasing in your business for money that is late coming in? This is really, really important because this is a really key area that many business owners fall down on. Many business owners are worried about chasing money. They feel it's a little bit rude to start chasing money, but this is something that, if this is money that you are owed, and particularly if it's gone past its payment terms, then that person is in breach of your contract. And therefore, you need to be chasing for this money. It's really important. So, understanding what that looks like for your business and perhaps therefore changing how people pay you in the future. So, if you have somebody that is very late all the time with payments, do you need to start asking for upfront payments before work is done? Because you don't want to put yourself in a cash flow bind and risk potentially never getting paid from another company that is perhaps themselves struggling. It's a surefire sign that one of your customers or clients is struggling financially if they are not paying you on time. If they are dragging their heels, if they are making up excuses, if they are promising that they'll get a payment out to you on Friday and it doesn't come for the next 3 weeks, that is a sign that there is a problem in that business. And you don't necessarily want to keep extending them credit, which is what you're doing when you invoice and they don't pay. You are extending them credit. You don't necessarily want to keep doing that if that business actually itself is at risk of going under and owing you money. So being on top of the money that you are owed, your aged receivables, first of all, invoicing on time, and secondly, having a process of follow-up for if people are late paying you. So, financial management. Are you regularly reviewing your operating expenses to ensure that they are lean and making sure that there is no wastage or unnecessary spending in your business? Performing an in depth review of your operating expenses at least every quarter and having that diarized so that you do, in fact, make sure that you do it is really important part of keeping your business financially healthy. So making sure that you have that in place is really, really important. Also, if you have people other than you purchasing within your business, do you have a purchase order system, a way by where they are only able to purchase up to a certain level, perhaps? They maybe need approval for certain things from you so that you can ensure that the costs are being controlled in the business and there's no overspending in areas that you have not agreed there can be spending in. And when it comes to direct costs, costs of sales, do you know what your industry standard is? Is someone managing the direct costs as a percentage of revenue in order to control costs? Do you have a target that needs to be hit in your business to ensure that you have the right amount of money flowing down in and available for your operating expenses and the other costs of the business? Somebody should be all over cost of sales if you are running a business that has a cost of sales involved in it. Okay. Now, another big thing is not running personal expenses through your business. To start with, it's messy. Secondly, it can cause some real tax messes. If you get a tax investigation, it just causes some massive problems. Just keep things separate. It's so much easier. It means that you don't have additional tax complications. It's just so much cleaner. So keep things separate. Please don't mix business and personal spending. But if you are, when we see clients do that, that is a red flag. It's a red flag that something's gone wrong, usually in their personal lives. And it's not a good idea. It's just not a good idea. Trust me on this. It looks very bad if you get a tax investigation. Are you analyzing your profit and loss line by line at least every few months? Are you actually looking at your profit and loss statement, understanding what it means, understanding what it's telling you, and helping use that as a decision-making tool in your business? Because there's a lot of data in that, and your balance sheet for that matter. And if you're ignoring that data, you can very well be ignoring some really key early warning signs in your business. So again, making sure you have time set aside to actually do this on a regular basis is important. And do you have a budget in your business for spending? Is there a budget for certain categories? And are you sticking to that budget? If you have a budget, are you reviewing your actuals to make sure that you are in alignment with that budget and you are not overspending? If you don't have a budget, it's something to look at because it does help control the costs in your business and it helps you understand what you need to achieve in your business as well. And do you have a budget specifically for capital expenditure? Let's say that you want to buy a new computer in 2 years' time. Are you setting aside money to be able to let you purchase that computer in 2 years' time or not? Are you going to get there and say, I need a $3,000 computer? Uh-oh, where am I going to get the money from? Making sure that you have foresight of things that you might need and actually start budgeting for those. And how often do you review your pricing? How much time do you have set aside every few months, every quarter, every 6 months, or even every year to review the pricing in your business, to make sure that your pricing is still profitable, to make sure that your pricing is still hitting on value for your customers and clients, and to make sure that you are providing the right things in terms of payment plans and those kinds of things associated with pricing too. That should be something that is standard and staple in your diary to review regularly to ensure that it is in the right place in your business. And are you looking at your long range financial goals and planning? Are you looking at, okay, I need to have achieved this by 5 years' time or 10 years' time. Therefore, what do the finances look like now in order to support that? Are you looking forward in that time period? Do you know the lifetime value of a client? Do you know how much they spend with you on average over the lifetime of being a client? And do you set aside money each week or each month for tax purposes? Do you squirrel away your tax money so that you're not tempted to spend it in your business? So some of these things might feel quite overwhelming when I'm listing them out in this way and I'm asking the questions of you, because if you're not doing them now, then it can be scary to think of all the things that you need to put in place. But just picking one or two this month and doing the same next month will really help you get a better handle on your business's finances. And is the bookkeeping up to date in your business? Is someone in your business doing that on a monthly basis so that you have a reconciled set of books and a working profit and loss and balance sheet? Those documents tell you so much. So making sure that the bookkeeping is up to date and relevant is really important, even if you are not a VAT registered business. Of course, for those that are VAT registered, you're probably doing it, let's say, quarterly for your VAT returns, but that's not the purpose of doing your bookkeeping just to panic get your VAT returns submitted. The purpose is to give you data on your business. So understanding that and making sure that you're reviewing those numbers is really, really important as well. And are you looking at those other pieces of data that feed in to the finances? Things like, how much is a lead costing you in your business? If you're using ad spend, how much is that costing you per lead? And what is your conversion rate? And therefore, how much is your ad spend costing you per client? And if you know the lifetime value of your client, you can work all these bits of data together to ensure that that source of leads and clients is profitable or not for your business, and you can decide what to do off the back of it. And of course, are you taking home consistent and reliable money from your business each and every month without fail? It's a real biggie. And also, if you've been in business for more than 2 years, are you taking home more money from your business than you would be if you just went out and got a job? That's a painful question, but it's one that's really important to ask, because you might start thinking about things a little differently. And are you happy with the level of money that you are taking home from your business? And do you understand how much you're going to take home over the next 6 months and have targets around that? So all of these questions all feed into what makes up a financially healthy business. And they're really important to look at on a regular basis. So it might be that you want to, bookmark this live and save it somewhere so that you can come back to it regularly and ask yourself these questions in your business to ensure that you are moving towards a more financially healthy position than perhaps your business is now. So that is what I wanted to share with you today. I hope that it has been helpful. I'm just starting up, so this is very interesting. Put my HMRC registration in the post yesterday. Is it handy to open a business bank account now? My income is not so big at the moment. Yeah, absolutely. You should absolutely have a separate business bank account. I highly, highly recommend it. If you are just starting off as a sole trader, you can absolutely still do that as well. Someone like Starling does free business banking, so I would recommend someone that does free business banking to not incur more costs. But absolutely, I would get a separate business bank account set up as soon as you possibly can. So thank you so much for tuning in today. I appreciate it as always. I will, of course, be back next Tuesday for another Training Tuesday. Next week, I'm speaking about how to create a budget. So do make sure you pop that in your diary, 11 a.m. on Tuesday. And of course, I am back on Thursday as well for our UK business and economy update. So again, at 11 a.m. on Thursdays, you can find me wherever you happen to be watching today. So do make sure you pop that in your diary as well. Thank you, everyone who's tuned in today. I appreciate it as always. Thank you for joining me, and I will see you all very soon. Take care, everyone.